And so I do want to say if you have any questions as I go through this, obviously just type those into the chat box. I'll be more than happy to kind of adjust everything that I'm talking about and really make it more specific to you. Everybody's situation, especially with accounting and taxes, is going to be pretty different. So we really do want to make sure it's tailored to you. I've got some slides I'll go through, and I've got a number of points that are going to be pretty relevant to everybody, but obviously we want to make sure it's really tailored to you guys listening in. So little slide my marketing team had us put in there. We take care of your accounting and taxes so you get back to running your business. That's just a little blurb about Indenaro. But what I want to talk about, so what you're going to learn here today during the webinar, two things all companies need for their back office, four options for how to actually handle your accounting and taxes, what you need to do for your accounting, and what you need to do for your taxes. So as we go through the slides today, we'll give you some really, really good tips on things that are common to all companies, and then I'll dive a little bit deeper so that way everyone has a good idea of the things that you really need to know about your accounting and taxes that honestly I'm surprised when a lot of people actually don't know. So we're going to make sure that you guys really understand not just the basics, but really best practices for running your accounting and taxes, whether, regardless of which options you decide to do with that, because it's really important that you have a handle on this. Every one of you, you're out there, you're doing these really cool businesses, you're starting up these cool companies, you're trying to run this efficiently, and for most of you, you're not actually accountants, you're not actually CPAs and tax experts, so it really doesn't make sense for you to be trying to learn all of this yourself. That's why you have experts like the team here at Indenaro. You have resources out there to make your life easier so that way you can actually run your business, and that's what we're here for, is to make sure you get that information, that knowledge, so you can effectively do the things you're good at without having to worry too much about the rest of it. So really quickly, let's start off, let's try a quick poll here. Like I said, we want to make sure this is tailored to everybody listening in. I'm more than happy to go off topic for as long as you all want, but what are you most interested in learning about today? So let's go ahead and get that poll started up there. You should see a little screen pop up. Oh, there we go. What are you most interested in learning about today? Accounting, taxes, both, or something else? Okay, starting to get some responses. Looks like some people responding both, some people responding taxes. Cool, we'll give it, all right. Looks like both 75% wanting to learn about both accounting and taxes, and they do tie in together, so that's good. Looks like we had 25% response for taxes. Not surprising, because if you're, say, a C Corp, deadlines are coming up next week, so yeah, you definitely need to get a handle on that, and we'll talk about it, and obviously we'll open it up to questions too. All right, very good. So yeah, we'll definitely focus on both, but then we will spend some time on taxes, and then any questions too, let me know. All right, so a little bit about me before we get started. My name is Darin Carter. I'm a senior finance consultant here at Indenaro. I'm also an entrepreneur and a business owner, so that's actually how I was introduced to Indenaro, how I got started here. I had started a small business with a couple friends of mine who used Indenaro for accounting, and then also were working at Indenaro too, so then they got me to join on because it really is such a good product, such a good, really a good place to be. And interestingly, a lot of the people in Indenaro are entrepreneurs themselves. I sit probably, really, anytime you go into our offices, a large majority of the people there are actually running their own side business, doing something on the side where they have the same concerns. They have to worry about doing their own taxes. They have to worry about doing their own bookkeeping. So we really, it's not so much that we're out here reading books and telling you about these pains that people have, or why you should do this. It's really us experiencing this too, and then knowing kind of that same experience and having those same pains of being worried about taxes coming up. We're in the exact same boat, and then we're also here as a resource to help you. I'm a rock climber. I put that on there not just because I like the picture, which that is me. Not everyone believes that, but I put that up there not just because I think it looks cool, which I do, but I put it up there because it emphasizes one of the points I like to make, and that's if you try to do everything yourself in your business, if you're trying to run every single aspect of your company, if you're trying to do all of the bookkeeping, all of the taxes, all of the sales, all of the marketing, every little aspect of your business, all of the operational side of it, all of the counting of inventory, you won't have time for anything else outside of running your business. So it's really, really smart to know what your company needs, what your business needs, and then how can you effectively complete those tasks? How can you effectively move forward with what you need to do to run the business efficiently and not necessarily make it fully dependent on you doing every single minor detail? And that's how you really free yourself up to do the things you want to do, whether it's running your own, whether it's growing the company that you're at, whether it's doing that and doing hobbies that you love, spending time with your family. The only way you can get to that point is by really taking advantage of the resources that are out there to lessen the time burden you have while still honestly running probably a better, a more efficient business because you're using all of the tools we have available to us. Not just in Dinero, all of the tools that are available out there to make running a company easier for everyone. So there are two things that every company needs, and this really doesn't matter what you do. You need two things: a way to track your money and a way to pay your taxes on time, every time. This is going to apply across the board. And what I'm going to do, I'm going to talk about four options you have for doing this. So everyone, and the first point too, a way to track your money. Not necessarily, everyone knows you have to pay taxes. Not necessarily everybody knows that you should really be tracking your money as in depth as a lot of people do, especially whenever people are just getting started. They say, oh, well, I know how much money I have in the bank. I've got a bank account. I log into my Bank of America online and check it there. That's not tracking your money. That's tracking how much cash you have in the bank. So there's a difference between tracking your money, making sure you understand where your expenses are going, where your revenue is coming from, and doing that in a way that has been done really for decades. Accounting isn't a new field. Bookkeeping isn't something new. And the key is really just making sure that you understand what's coming in, what's going out, and aligning that with what your goals are. And taxes, obviously, everybody's favorite subject, taxes. Sorry, gotta pay them. We'll help you figure out what you owe so you don't end up making giant mistakes, but unfortunately, we're all in the same boat on that one. So, four options for doing your accounting and taxes. And these, I want to emphasize that some of these options are going to be good for different types of businesses, different types of people, different skill sets. So it's not one size fits all. And I'll go through each and talk a little bit about the pros and cons. And really, it's going to be up to you to figure out, okay, is this option right for me? Is another option right for me? Obviously, we've got the team here at Dinero. If you think that one that's relevant to us is good, reach out. I'll have my contact info later on. Reach out. We're happy to talk with you anytime. But option one. So on the cheap, this is really usually the first option that a lot of people go with whenever you're just getting started. You don't really have anything happening too much in the business. If you're doing this, basically it means you're not really doing much accounting work. Maybe you have a little bit of tracking that you're doing, like an Excel sheet, but really because you're not spending anything hardly, you don't have any revenue at this point. all you're doing is really just looking at the number in your bank account and saying, oh, I have X amount of dollars left. And then doing the end of year taxes, all you have to do is hire an accountant for one-off to do your pretty simple year worth of books at year end to file taxes. That's going to be the cheaper way to do it. The problem with it is you have no insight into cash flow or profit and loss unless you're doing um, daily, monthly bookkeeping, daily, weekly, monthly. You really can't get insight into the amount of profit and loss that you have, the where you're financially strong, where you're financially weak, and so it's really important to understand the downsides. You might be at a point where maybe doing everything cheap um, is a better option because there's no profit and losses for you to even gain insight on. In that case, great, do that for a little bit and then hire an accountant, so a CPA usually to do taxes at year end. That's going to be cheaper than doing anything ongoing. Another downside, you still need to track bills separately. So um, yeah, it might be easy when all you have is one cable bill and maybe you're paying some rent for your office space, but eventually, as your company grows, there ends up starting to be quite a number of bills that you have to track separately, and it's not just tracking so that you can pay them on time. That's obviously important, but it's also tracking them to know how does that fit in with your cash flow. If I know that I have these liabilities that I'm going to have to pay on these dates, uh, outside of just remembering that or having a list of what bills you need to pay when, it can start to get a little bit daunting. And then I've seen people put themselves in the situation where they look at their bank account on Monday and they say, oh, look, we're great. We've got plenty of money in the bank. Let's go ahead and make XYZ purchase. And then they kind of forgot about this bill that they had coming up in 2 weeks that was going to be for X number of dollars, and now they're $3 short on either maybe paying that bill or paying an invoice off. So it's really important to make sure you have a system for tracking that, so that way you don't put yourself in a bind where you've ended up accidentally spending too much money because you glanced at your bank account and it seemed like you had a lot, but if you were doing everything properly, and that's really what accounting is for, if you were doing everything properly, you would have known, oh, I don't actually have this money. It's in my bank account, but it's not available for me to use on something within the company. Who it makes sense for, on the cheap, it really makes sense maybe for freelancers with a few expenses. You don't really have a lot on consistent revenue stream, so you know where your money's coming from already. Freelancers, more often than not, are kind of the best candidate for not necessarily doing any kind of daily, weekly, monthly bookkeeping. So that's the first option. Definitely viable if you fit in the category. Option two, do it yourself. This is so first you start out, you're doing it on the cheap. Then you move to doing it yourself because you do have enough that you really should be tracking it, both for tax reasons and for just your own understanding. Using software like QuickBooks, Xero, that's usually a good do-it-yourself option for doing your tax or for doing your regular bookkeeping. And then you hire a CPA at the year end. So it's do it yourself. You're doing the work. The problem with it is, so again, just like all the options on here, they can be appropriate at one time and then they can be a detriment at other times. The problem with it is it takes you away from building your company. So at a certain point, you're going to start spending, maybe early on, you're spending an hour, a week on doing proper bookkeeping for your company. But then you start to grow, um, expenses become more complex, revenue becomes more complex, and so now you're spending 2, 3, 4 hours a week, and all of a sudden you're spending more time on accounting than you are on anything else in your company. You're not actually a bookkeeper or accountant by trade. You're, some super smart person building this really cool new company. Now all of a sudden your accounting is yes, it needs to be done, but it's almost hurting you because you're spending your time on it when you could really be spending your time doing something else that's going to be better for the business. And at that point, it's really an opportunity cost situation where you're spending time on this thing that does need to get done, but does it necessarily need to be your time? Investors, so if you're taking on investors, if you have uh, really any kind of investors, VCs especially, they don't want non-accountant founders doing the bookkeeping work. That's something that is the bookkeeping is usually so it can be simple enough that yeah, most of you are probably smart enough to do it. Absolutely. Um, Unfortunately, it's tedious enough so that in order to do it properly, it does take time. And if someone's investing in your company, they're doing it because they believe in your vision of what you can actually do with the company, where you can build that, how you can grow that and scale it. And they don't they don't want you. They're not investing in your company so that you can do bookkeeping work that you could hire a simple accounting associate to do. They're investing in you because they believe that you have skills beyond what really what most people would have in order to build that business. The other downside is mistakes can be very, very expensive. Um, when tax season rolls around, and we see this all the time, we'll get somebody who they come to us and they say, hey, I've been doing my own books for, for the last year or so. I've been spending about an hour a week on it. Here, take this. I want you guys, engineer, I want you to take over. And also, can you do my taxes for this most recent year for the books I've done? And we'll go into it and we'll take a look and we'll say, whoa, 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 this is really out of whack. Like you should have probably been spending a few hours a week on this. So number one, a lot of people end up spending too little time because they think they're doing it right, and it's their own time. So they want to value that, but they end up doing wrong bookkeeping work, and we get that and we say, wow, this is a situation we can go in there and clean it up. Um, but the alternative is if they hadn't come to us or if they didn't go to somebody who was willing to take a look at what happened to their bookkeeping, now, once you get into tax season, maybe you're running into compliance issues. Maybe you're running into um, issues where your taxable income is significantly different from uh, what it should have been in reality. So obviously, all of you, want to try to pay as little in taxes as you can. The IRS has rules in place to allow people to either benefit from or otherwise uh, to avoid necessarily paying too much taxes. But if you're doing your own bookkeeping, you can end up categorizing things or recording recognizing your revenue in such a way that you end up paying more taxes than you necessarily should have. Or you might even be in a situation where you didn't actually have to pay any taxes, but you do because you had done the bookkeeping in a way that you thought was correct. Or maybe it is correct in one situation, but not in yours, and you had some options there with regards to the bookkeeping. So that's why it's really important to have an expert really to rely on to say, hey, we're doing this. We know we work with companies like yours, and you have two options that are both correct in the bookkeeping world. Here's how they're going to impact you come tax season. Obviously, this one looks like a better situation because you're going to minimize your taxable income. So you have a lot of different options there, or maybe they're aware of certain tax credits that you weren't. So whenever you're marking some of your expenses, they can get you more credits just because they're aware more in depth of what rules the IRS has in place. But the do-it-yourself option is good early on when maybe you legitimately don't have enough money to outsource it or to bring someone in-house. Um, you also aren't complex enough yet. And again, to determine your complexity, I probably would suggest you talk to an expert about it. And, so now we're on to option three, traditional accountant. This is good for companies with an existing accounting policy. So if you have somebody who does have experience with building out a an accounting team, hiring a traditional accountant can be good because you know exactly what needs to be done. You know how to train them. You know how to set up your accounting policies and procedures properly, so that way you can book your revenue, you can book your expenses properly. The it can be really good in that situation if you have the proper tools to train them properly for your specific business. Um, the downside, expertise can be highly variable. Do they work with companies like yours? Have they had experience dealing with revenue streams like yours? Do they have experience in your industry? Um, the part of the issue with it is if you don't have those established policies, those established procedures, you don't have someone who's experienced um, dealing with a traditional accountant that's dedicated to your company, then it's not necessarily straightforward to just bring someone on. Not all accounting is the same. There are a number of situations where someone even comes to Indenaro and they say, "Hey, we do this, this, and this. Can you handle my accounting?" And because everything can be so specialized, there may be a case where um, we say, "Oh yeah, that's great. We specialize in that. We do that all the time for a number of clients." There may be another case where we say, "No, we actually don't do that type of accounting. Here's what we recommend. We can introduce you to this person," and they do. So it's not just a matter of going and posting on a job board, "Hey, we're looking for an accountant." It's really, we need these certain things to be done within our accounting, and if you don't know what those are, then that's really the first step you have to do, is figure out what your actual accounting needs are. And then you need to find someone who can do that for you. And a lot of times it's multiple people. It's not just usually, rarely do you find one person who can do well, all of them can do the tedious kind of daily grind bookkeeping work that you can hire someone a little bit cheaper to do, but then the uh, more expertise that's required, the more complex everything gets. Now all of a sudden the person who will do the more complex accounting and tax issues, they're going to charge quite a bit more than the person who's doing the daily bookkeeping. And so if you hire one person to do either you're not getting enough expertise because you have just a regular, accounting associate um, doing all of the work, so it's cheaper, but you really don't have the expertise you need, or you're paying somebody way too much money to do, and who has the expertise, you're paying them way too much money because you're also paying them to do the bookkeeping work. That's why you really never see like CFOs actually doing the bookkeeping. They have a team under them doing it because they're focusing and they're getting paid to do more strategic, more high-level work rather than just categorizing and reconciling expenses. Deliverables, highly variable. I put this on there. That's kind of what I was touching on a moment ago. But yeah, cheap bookkeepers can do the minimal bookkeeping work, um, but the loaded costs of it, in order to do it properly, can end up being very, very expensive. So I'll see all the time someone will go off to someone else and they'll say, "Oh, hey, in Dinero, I talked to this other person. They charge maybe a third of what you do." And it's not that anyone's cheaper. Most accounting services are going to be relatively similar in price. It's that they're just doing less work. They're not doing the same things as us. Or in other cases, whether it's us or anyone else, uh, to do less work is cheaper. It's not that any individual or any firm necessarily is all that much cheaper. It's that they're doing different work. And bringing someone in-house, if you ended up going that route, so you're bringing accountants in-house, in order to do it properly, to have, say, an in-house CPA, an accounting associate or two, the accounting manager that you need, that ends up, just because of the loaded cost of hiring, of training, even if you can do that, can oftentimes end up being very, very expensive for a company that's really not prepared for it yet. Usually, you'll know for sure if you're ready to build and train an in-house team, and if you're not 100% sure of that, honestly, you're probably not ready for that point. But most companies get there at some stage, hopefully, if you're doing really well. Um, and a lot of times, back office is not as transparent as you need. So that can also be an issue with a lot of traditional accountants. You know, they're maybe sitting in a basement doing the accounting on QuickBooks, and you have to send them an email anytime you want a report of your finances. You can't just log in and check on how your finances are doing. And in this day and age, with technology that's out there, that we're kind of accustomed to it, and it just makes everything so much easier if you really have easy access to um, the financials you need. And also, they may not be showing you everything that they're doing, so they'll do the work behind the scenes, and then they'll send you a report once a month, and that's really all the contact with them that you have, rather than being able to see all of the work that they do, not because you're going to check that all the time, but because you can check it if you need to. And you also just want to make sure you know what's actually happening with your accounting. Uh, Again, everything can be so much different company to company that you really need to be working with someone. You don't just hire an accountant and they do your books for you. You hire an accountant to work with you to build out what needs to happen for your company as you work with them. It's not just a click of a button and they start bookkeeping for you. There's a lot of back and forth, and really a partnership involved, whether you hire someone in-house or outsource, whatever it happens to be. So again, bringing someone in-house like a traditional accountant or accounting team is good for larger companies that have very established procedures. Option 4, software and service. So the do-it-yourself, that's the software side of it. The service, that's the traditional accountant side. So they're doing it for you, doing it yourself with the software, or doing it for you with the service. There's also starting to be a new category that's really being enabled by the tech scene in, for example, in Dinero, where we started in San Francisco, and we kind of grew out of the tech scene there into starting as a software, also doing the accounting and tax services, and so really combining the ease, the user friendliness of a tech company, and also just the agility and scalability that you come to expect with any of your tools that you use for any aspect of your business that you're using with more modern companies, but also the expertise of a traditional firm that's offering accounting services. So that's where Dinero fits in as well. So we're doing both. We're doing the do-it-yourself software, but then we're doing it for you. Financial transparency through on-demand reports, cloud-based, founder-friendly software. Again, one of the benefits of using something that's cloud-based, and Dinero is not the only one. Of course, we're going to tell you we're the best, but there are a few other options out there that are similar to this, although different, and they focus on different things. Like I said, everything with accounting and taxes is going to be very different. It's not just one size fits all. And usually, whenever you're dealing with cloud-based software like ours or anything else, transparency goes up. You can see what's happening with your accounting. You can see your reports when you need them, not just when your accountant happens to be not on vacation. So it's much more transparent. Provides simple accounting for early stage companies along with more complex GAAP-based accounting for growth stage companies. So one of the benefits of working with something that's scalable is that ideally, and again, this is another case where not everyone does it, but ideally you can do the simple accounting in your early days where it's really not all that complex. And then as you grow, the type of accounting that you need to do changes. So there are multiple ways of doing accounting properly and really by the books and compliantly. And if you're someone who's planning on scaling, planning on growing, you want to make sure that your accounting partner, your accounting and tax partner can grow with you. Because otherwise you end up in the situation where in order to really understand your finances, or if you're talking to investors, they say, we need this type of accounting. We need it cash accounting or accrual accounting. You need someone who can do everything, so that way at the snap of a finger you say, hey, we need more accounting done because we're trying to raise a $2 million funding round and our investors are laughing at our finances because we've been doing them way too simple before. Can you help? Well, you want to make sure that whoever you're using can say, yeah, sure, no problem. You don't want to be in a situation where now all of a sudden you're having to evaluate services again, you're having to evaluate um, what you want to switch to because you had chosen someone originally that was maybe the cheapest option because they only do simple accounting, but they can't scale with you, which ends up costing you more in the long run, potentially. Um, and not all companies provide the same levels of customer service, founder friendliness, scalability in accounting or tax work. So definitely make sure to ask around. I always tell people, um, when they say, hey, how should I evaluate different services for my company? Um, do you guys have like something I should look at? Do you have, what do you recommend for that? Instead of trying to tell them how great End and Arrow is, I honestly tell people, ask co-founder friends of yours or ask founder friends of yours. Talk to people in your network and find out what they use. And that's really how End and Arrow has grown, and that's how I see most of the services that we use that we really like internally, and as well just talking around to other people who are running companies. That really the way to find what you need, and that's how we grew because we found that if our customers really like us, then they'll tell people about us, and then when they're talking, they'll make recommendations for us, and it works out in everybody's favor because you can actually talk to people that you trust to tell you, hey, we use this and we actually really like it, or yeah, don't use this one. It looks really nice and really fancy, but you're going to run into this problem, a year down the line because, they can't scale or you can't actually talk to a human being there. So definitely ask whenever you're looking around for these. Quick poll question. So we've gone through the four options. What option do you use? So we'll put up the poll question here. So which one do you currently do? Do you do it on the cheap, where you're pretty much not doing accounting, then doing one-offs for any of your tax filings? Are you doing it yourself using QuickBooks, Xero, Excel spreadsheet maybe? Do you have a traditional accountant, whether it's in-house, whether it's someone, a part-time bookkeeper, or are you doing software and a service, or is it something else? Cool, getting some responses here. All right, and the results are in. Do it yourself, 67%, software plus service, 33%. Cool. Yeah, that's interesting, and that's really what we see a lot of the times. It's good that everybody's actually doing some form of accounting, whether it's yourself or not. The fact that you're doing that means you really are ahead of the game a little bit. And now you're reaching a point where you've been doing it yourself, and so now you're reaching the point, okay, at what stage, because obviously you can't keep doing it yourself forever. So it makes a lot of sense probably where you're at right now, and now the next stage is planning for, okay, I'm doing it myself now, when does it make sense for me to do it differently, to have somebody else do this so that I can do something else, so that I can focus on building the company. Some milestones for that are actually, now let's go on to the next slide and I'll talk about that. When do you know which option is right for you? So regardless of how you're doing it now, you want to know what's the best option for me now, what's the best option for me 6 months from now, a year from now, 2 years from now, so that way you can plan accordingly and you can plan ahead. Unfortunately, you can't really just, it's accounting isn't so straightforward, or taxes aren't so straightforward that you can go, the day before taxes are due and ask a company to do your taxes for you. These are things that need to be planned for in advance. And with accounting, if you're planning on a year from now needing to do a service like, say, End and Arrow, for example, coming from do-it-yourself, you should talk to whatever you're trying to do. You should talk to somebody well in advance before you actually need it, so that way everyone can be prepared, and then it makes your life easier because you don't have to stress about trying to change everything over. Size, number of employees, number of customers, your monthly spending, your monthly revenue. These all determine which option is going to be best for you. If you've got 0 employees, 0 customers, spending is maybe $5,000 a month, and you have 0 revenue, okay, yeah, do it yourself. That's starting to sound like a really, really good option. On the other hand, if you have spending in the range of 50,000, 100,000 or more per month revenue, let's say it's even still 0 revenue because um, you have no customers yet, but you have 5 employees. Now, because of all that spending, you have these expenses that need to be booked properly. That's when and if you're spending 40, 50, $60,000 a month, that's when you really should bring on some sort of expertise, outside expertise. Even if the doing it yourself doesn't seem like a lot right now, a lot of the situations we run into are they the the do-it-yourself option doesn't take much time because it's being done wrong. Um, so that's when you're getting into the 25, 50, $100,000 per month spending range. That's when it's time to start looking at um, at at bringing on outside expertise to help you with this. Um, Requirements. So a lot of people have investor or lender requirements that are going to dictate really what they need to do from their accounting. Investors, especially if you're looking for VC funding, uh, you need more complex accounting than say someone who's borrowing $1,000 from their family to start up this company. Those are completely different accounting requirements. So you need to make sure you're talking with someone and you're dealing with someone that knows what those requirements are. If you don't know, if you're not sure if you have requirements for your accounting, and it's not even necessarily for your accounting, it's really expectations that investors and lenders have for how they're looking at your finances. You can produce balance sheets for people depending on how you've been doing your bookkeeping. Those balance sheets, in one, you can look like you have no assets, and you hand that to an investor and they say, well, your company's not worth anything. There's nothing on your balance sheet. And you can have the exact same company, and just because you're doing a different form of accounting, both of which are proper, by the way, but you're doing a different form of accounting, you hand them another balance sheet that says you have um, an actual reasonable number of assets, and your books actually look like you have a company that's valuable rather than just a huge company with tons of losses and nothing on your balance sheet. So it's really important to understand, and a lot of times they're not going to tell you what they expect. They're going to look at it and expect that it already looks proper. So investor requirements and lender requirements can absolutely dictate what you need to do with your financials. Your product or your service, depending on the terms and how you're selling your product and service, that can really make a significant impact on what type of accounting that you need to do as well. And also what type of how you're going to be able to do your taxes later on. If you sell a product that is a monthly subscription that you only sell monthly and you deliver all of the services monthly, that's different accounting needs from, say, you have a huge contract that's 12 months long and people pay upfront and then they pay the rest on 90-day terms at the back end. That, in order to properly understand your profit and loss and how your company is doing, that's very different accounting from the case where it's just a $10 monthly subscription. And it's not always the cost or complexity of the product. If you have inventory, then that's going to be very different than if you're selling, say, consulting services, or if you're selling just an online SaaS product. So all of these are going to dictate the differences in how you need to do your accounting. And if you're doing it yourself right now and you're not really sure, these are things that you definitely need to talk with someone and get that under control, because doing it yourself, you could be doing it correct for a different type of company than yours. So if you're doing it for your company, it turns out that wasn't actually the type of accounting that you needed to do, even though you're doing it properly according to one method of accounting. Goals, financial insight, fundraising, decision making, compliance. So if you want financial insight into your finances, into your books, into the accounting that you're doing, your profit and loss, cash flow, balance sheet, those require more accounting work in order to properly get those insights. If you do the bare bones um, if you do the bare bones accounting work, then you actually don't really get insight into your finances. The bare bones accounting work is going to let you do your taxes legally and compliantly, but it's not going to give you any insight into what's actually happening, where your profit and loss is, where your financial strengths and weaknesses are, so that you can strategically make intelligent decisions. Fundraising, again, if your goal is to fundraise, you should plan well in advance of when you're fundraising. Talk to someone who understands what finances you need to deal with whenever you're dealing with investors, so that way you can go into these meetings and not get laughed out of the room because your finances make your company look like a joke, even though they're compliant tax-wise. But if you've just been doing the minimum accounting, it's not always going to be what you need to actually meet your fundraising goals. Decision making, this ties into financial insight. If you're planning to make decisions based on your finances, you need to make sure you're doing the proper level of accounting. Your goals, your requirements, your size, these all dictate what you need to do, which option is going to be best for you. Because again, every option is valid in certain situations. And talking to an expert really is going to be one of the better ways that you figure out if what you're doing is right for you, unless you're a trained accountant or a trained CPA. In that case, great, you probably know far more than even I do if you're a CPA and you're already doing taxes for a number of companies. So your accounting, I'll go through this pretty quick because it's really going to be a list of what you need from your accounting, regardless of which option you do. You need profit and loss statement, balance sheet, cash flow statement, and an accounts payable. So you need a way to basically pay your bills. And then these three statements, no matter what you're doing, these are going to be the three important ones, and these are what you're going to need to do your taxes later on. So regardless of whether you're doing super simple or super complex accounting, you still need to be producing these statements in order to get the deliverables that you need from your accounting. Now, all of these are going to look very different depending on the method of accounting that you use, but these are still the ones that you need, and especially whenever you're showing investors, whenever you're showing lenders, these are what they're obviously going to take a look at. They're not going to look at your general ledger that has a list of every single transaction. They're going to look at the statements. Things to consider. I have a PDF if anyone wants it. We have a great guide that actually goes through a lot of these. I know there's a lot of words on the screen right now, but things to consider: your time, your money, and expert advice. Time, obviously, if you're doing it yourself right now, then maybe it's not taking up much time, and so that's a valid option because it's going to be cheaper. Then again, if your time is very valuable and it's starting to take up too much, maybe it's time to spend a little bit of money in order to get something else. But if you legitimately can't afford to outsource it, then obviously, don't bankrupt your company trying to outsource it just to save yourself some time, even though long term that's what you need to do in order to grow the company. And expert advice, again, this is especially if you're doing it yourself, or if you're growing, you're talking to investors, you're spending 25, 100,000, 200,000 per month, you really need to make sure that you have expert advice. Some people I talk to, they have. I talked with one founder recently whose dad was a CPA. Great, he's got immediate access to expert advice. A lot of people don't have that built-in network of expert advice. That's where someone like Indenaro or someone else who's readily available can that's the role they can serve for you. So that way you have questions. Hey, I'm thinking about doing this with my company. How is that going to affect me from a tax perspective? How is that going to affect how I need to do my bookkeeping? Or I'm planning on changing my services so that way we offer 6-month terms on a 30 on or 6-month contracts on a net 30 term, how does it affect how I actually need to do my bookkeeping? These are questions that are very, very important, and they need to be answered, but you need to make sure that you have someone there to answer those, really. Tax filing, everyone's favorite topic. I know you all love giving money to the IRS. I know I don't. Unfortunately, we all have to do it. Quick poll question. Are you up to date on your company's tax filings, including 2015? This one's always interesting given where we are in the year. So far, seeing some yeses. Very good. Breathing a relief. No no's yet. Okay, nice. Very good. Looks like everybody that responded said yes. Very, 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 very good to hear. If you said yes and you were lying, or you clicked the wrong button, get that handled. Everyone has to file taxes, even if you're not profitable, even if you don't have revenue, you still need to file taxes. Um, Not a lot of people realize that, but everybody has to do taxes, regardless of whether you're profitable, whether you have revenue or not. You still have to file. You may not have to pay, but you do have to file. Tax filing must-haves. Again, expertise in your type of business, so you don't have to pay more than you have to. Compliance, so you avoid fines, penalties. There can be some serious penalties out there that don't necessarily apply to everybody. And in your case, if they do apply, they can be crippling to your company. Fast response times, even during the busy season, this can be really important. Things get a little bit hectic around tax season for business owners, and you want to make sure that you're dealing with someone who is there for you. If you're just dealing with, so a lot of people who do it yourself or who just hire one-offs for CPAs, there are some places you can do one-off CPA work to file your taxes where it's just one person. So the company is just that one person, and if they get sick, if they go out of town, you're really kind of out of luck because now all of a sudden you don't have someone to handle these questions whenever they get hectic for you versus other places, and like in Dinero too, we have a number of people who can help you. So if one person is out for whatever reason, it doesn't really affect anything. It doesn't change anything because we're still able to get that expertise to you. If you're a resident or non-resident alien, you need to work with someone who understands what your obligations are because those are going to be really quite different. And that's also, again, avoiding fines and penalties. Those are really, really important because, again, they can really seriously damage your company financially if you miss out on something that you just didn't even know you had to do. Again, things to consider: time, money, expertise. Your time's valuable, so make sure that you're using it properly. Your money, if you can't afford it, this is something that you really do need to make sure that you're able to get handled, even if it takes a little bit more than you would like. Doing taxes always costs a little bit more than everyone wants, so making sure you have a handle on that and you're planning ahead for it is super important. And then expertise. Taxes are so complicated and it's so different for every industry, every company that having a partner that you can work with that understands your industry, your company, and how you run is very, very important. This part, I'd talk a little bit about Indinero's software and service, but I know we've been running a bit long. It's almost to the hour point. So honestly, I'll just skip straight to the end and open it up for any questions that you have. And also, a little call to action: contact me at darin.carter@indinero.com if you have any questions at all. If you want to know if how you're doing things is the right way that you're doing them, what are you doing right now that's okay? What should you be doing that you're not aware of? That's usually the more important one. It seems like there's always something that when I talk with someone, they're just not doing something they really should be doing. Contact me. I'm happy to chat with you. We have a very excellent team here at Indanero that's really serving as our support base for everybody who has questions, even if you're not our client right now. You may, figure out, we kind of work out a plan if you talk to me and figure out, okay, here's a good plan for you right now. Here's what's going to make sense for you a year later. Indanero might fit in here, or Indanero might not fit in, so here's what another option is. We're happy to talk with you to help you map that out ahead of time so that way you know what you're getting into.